Yes, good morning, boys. We were rates of taxes. Yes, we had a homework question to do. Let's look at what the homework question was. We came and said that we are looking at question number 5. Yeah, okay. We were looking at question number 5, and I told you that we have to rework this question if you are going to look at PGBP becoming 5.1 crores, dividends becoming 1.9 crores, and LTC. Acha, 5.02 crores. So we're looking at PGBP becoming 5.02 crores, dividends becoming 1.9 crores, and LTCG under 112A becoming 1.28 crores. Your total income becomes how much, people? So if I'm looking at PGBP, the PGBP has become 5.02 crores. Your dividends has become 1.90 crores. And then you have an LTCG under section 112A after 23rd July, which is 1.28 crores. Your total income becomes 8.2 Achha, 8.2 crores. Now, the reason I gave you this question is because very simple, people. When you actually go back and you remember your inter, you had this concept called as marginal relief. You had this concept called as marginal relief, where normally they used to come and tell you that marginal relief is apply in case your income is very close to the slab changing income. Yes or no? So normally they would come and say that if your income is about 5.02 crores, you have to apply marginal relief. You have to apply marginal relief. But the one thing which you would have been taught in inter is that that is only when the total income is very close to 5 crores. Yes or no? If you notice the case here, the total income is actually 8 crores. So normally a person would come and imagine that, yes, you know what, marginal relief will not apply. Yes or no? Yes or no? But you actually, what you did not understand in inter is that margin relief does not apply on the total income being higher than the 5 crore limit. Yes, it actually applies on that income where the surcharge changes. It applies on the income where the surcharge changes. Look at this and come and tell me, Rahul, dividend ka surcharge was 15. LTCG also surcharge was 15. Now this 15 was there even if the income was before 5 crores or after 5 crores. Did surcharge change? No. But when you look at this PGBP, the income was 5.02, therefore the surcharge became 37. Whereas if it was 5 crores, it would have been 25. So if you notice, margin relief is actually applicable. Yes or no? Yes or no? Yes. If you ignore the other two items, then margin relief becomes applicable. Yes. The point I'm trying to make, people, is that it is not that the total income should be changing to 5 crores. The total income should be changing to 5 crores. It is that income where the surcharge changes that should be near 5 crores. That should be near 5 crores. And therefore, what I will do, I will still apply marginal relief. I will still apply marginal relief. Rahul, how does this work? What will I do? I will first compute my special incomes just like that. Because anyway, that will not change. Anyway, that will not change. What are my incomes, Rahul? I have a dividend. We already discussed yesterday, because dividend is at slab rate model, it is beneficial to give dividend taxable at 30%. So I'm going to tax dividend at 30%. It is 1.90 crores into 30%. Number becomes 57 lakhs. Then you have your LTCG under section 112A. LTCG under section 112A. How much is this? 1.28 crores minus 0.125 lakhs. 1.25 lakhs into 12.5%, number becomes 1584375. If I total this, this is my special tax income. Number is 7284375. 7284375. On this, I will add surcharge of 15%. Number is 1092656. Total becomes 8377031. Sweet. This is your special incomes and special tax. This is your special incomes and special tax. I'm going to then come down and I'm going to compute my normal income. How much is my normal income, Rahul? My normal income is 5.02 crores. 5.02 crores. I am doing what regime? I'm doing alternate. People, if I do default, there is no margin relief coming because surcharge will not change. So I'm doing alternate regime. It is for the first 10 lakhs. Number becomes 1,12,500. For the balance, how much? 4.92 crores. At the rate of 30%, number becomes 14760000. Number becomes 148,72500. 148,72500. On this, I will add my surcharge at the rate of 37%. Number becomes 55,02,825. Total the number 203,75325. 203,75325. Yes. Now because I know margin relief will apply, I'll also have to create a column number 2. So I'm going to create a column number 2 on the right side. I'm going to say my PGBP income, assuming it was 5 crores. What will happen? For the first 10 lakhs, it is 1,12,500. For the balance, 4.9 crores at the rate of 30%. Number becomes 147,000,000. Total becomes 125,000. 148,125,000. This is what my surcharge will look like. I will on this add a surcharge of 25%. My surcharge becomes 0.3,125. Total becomes 185,625. Tell me what is the difference in tax? What is the difference in tax, people? 1859,700. My difference in tax is 1859,700 for earning an extra income of 2 lakhs. Can I pay that much? No. So I will come and say I will give you of 2 lakhs. I will give you of 2 lakhs and I will not pay anything extra. I will not pay anything extra, which means I'm going to get a marginal relief of 16,59,700. So I will claim a marginal relief of 16,59,700, which means my tax here becomes 1871,562.5. I now know my tax on special. I now know my tax on normal. I will add both. So 1871,562.5 plus 8377,031. My gross tax is 270,92,656. On this, I will add cess at the rate of 4%. Number becomes 1083706. Total the numbers 281,76360. 281,76360. This becomes my final tax payable. This becomes my final tax payable. Yes or no? Yes or no? Yes. Note down if you want to note down quickly. Yes. So the idea is very simple, people. It is not that your total income should be near the slab where the surcharge changes. It is that the actual normal income should be near the slab where the surcharge changes. If it does, then you will apply a marginal relief. The idea is very simple, people. If you go to the question before this, in the question before this, the total income was 5.28 crores something. Correct? It's about 5.28 crores something. If you technically observe, 5.28 is also marginal relief case. If the whole 5.28 was a normal income slab, you would have done marginal relief there also. You would have done marginal relief there also. The only reason you did not do it is because the surcharge never changed. The surcharge never changed because for the dividend and the LTCC, you anyway applied 15 only. But for the normal income, it remained at 25. It never went to 37. When the surcharge itself did not change, marginal relief will not come. The whole idea of marginal relief itself is that I am going to end up paying more tax than my income only because of applying an extra surcharge. Only because of applying an extra surcharge, which is not applicable in the previous case. Yes or no? Yes or no? Meaning
So if I had about
STCG. अच्छा 112 है. Okay. So for them it does not matter, right? Because the surcharge is going to remain 15. See, the whole idea of margin relief is what? I am coming and saying if my income is 5.02 crores, I will apply a surcharge of 37. Whereas if my income would have been 5 crores, I would have applied surcharge of 25. So that extra 2 lakhs is asking me an extra surcharge of 12, right? So that's the check mechanism. Now come to the dividend and LTCG. What is happening? If you go for a dividend and LTCG, above 5 crores also it is 15. Below 5 crores is also 15. Is your surcharge changing? You're not, right? Because technically it's going to be, so you're telling me the other income is not there itself, is it? So then in that case it is not changing, right? Understand, Sayul, what I'm telling is, if you are telling me there is other incomes of let's say 4 crores, okay, and there is dividend income of 1 crore 1 lakh. Now question is, even if the dividend was 1 crore, will the surcharge become 10%? It will remain at 15 only, because you're already crossed the 2 crores bracket, which means it is always 15. Yes or no? Yours is a scenario where you're coming and telling me there is no other incomes and there is only dividend and LTCG. In that case, will you apply surcharge? Yes, because surcharge is now changing. Clear enough? Yes. So you will have to come to a scenario where you're coming and telling me there is no normal incomes. Dividend is 1 crore 1 lakh. In that case, what will happen? If it was 1 crore 1 lakh, you will apply surcharge of. But if it was 1 crore, you would apply surcharge of. Then margin relief will apply. Yours is the case where it will not apply because the 15% is not going to change its brackets. Make sense? Yes? Yes? Put a note down. Put a note down. Hey, you wrote this as this next question or it was a continuation of this question? You wrote it as next question? Okay, the note. Note for question number. जो भी है तुम्हारा previous question. Whatever was your previous question, note question number. For question number, whatever it is, no margin relief was. No marginal relief was applied. No marginal relief was applied since the surcharge never underwent a change. The surcharge never underwent a change upon crossing 5 crores. Upon crossing 5 crores. Upon crossing 5 crores. Whereas in question number, the second question, whereas in question number so and so, the margin relief will be applicable. The margin relief will be applicable since the PGBP income, when verified on a standalone basis, since the PGBP income when verified on a standalone basis has underwent a change in surcharge, has underwent a change in surcharge from done. Yes, underwent a surcharge change from 25% to 37% upon crossing 5 crores. Upon crossing 5 crores. Upon crossing 5 crores. Yes, this is basically an advanced level kind of question from your inter people. You would have done basic level questions in inter. We are going a little advanced, nothing else. Yes, at the end of the day, these are not very tested in exams because these are little complex. But yeah, good to know, because when you enter the practical world, if someone comes up with these kind of scenarios, you should be in a position to answer them the questions. Clear enough? Yes, great. Let's take a minute and let's revise what we have done till now from last class. Yes, we started with the tax rates of individual, where we came and spoke about the fact that there are two regimes. One is called as alternate regime and one is called as default regime. Under alternate regime, we came and told there are three models. If you are a normal person, if you are a resident senior person, and you are a resident super senior person. If you are a normal person, your slabs are 0 to 5, 2.5 lakhs, 2.5 to 5 lakhs, 5 lakhs to 10 lakhs, and above 10 lakhs with 0, 5, 20, and 30. If you are a senior person, then it is 0 to 3, 3, 2, 5, 5, 2, 10, and after 10 with 0, 5, 20, and 30. And if you are a super senior, it is 0, 2, 5, 5, 2, 10, and then above 10 with 0, 20, and 30. This is what we discussed. Then we moved on to something called as default regime, where we came and said the current year amendment says it is 0 to 3 lakhs 0, 3 lakhs to 7 lakhs is 5%, 7 lakhs to 10 lakhs is 10%, 10 lakhs to 12 lakhs is 15%, 12 lakhs to 15 lakhs is 20%, and after 15 lakhs everything becomes 30%. Yes. Then we came and spoke about the fact that if you are an individual, you also are chosen to become either rich or poor. If you are ended up being a poor person, you will be eligible for something called as rebate, where rebate is an old regime, meaning the alternate regime comes and says you should be a resident individual with a total income less than or equal to 5 lakhs, in which case your tax payable will be reduced by 12,500. Whereas if you go to the new regime or the default regime, your total income will be 7 lakhs, where you will get a rebate of 25,000. You will get a rebate of 25,000. Ideally, you should get 20,000, but you are getting a 25,000 in the current year. For both the rebates bracket, you will not be eligible for rebate on 112A. Then we went on to surcharge bracket, where we came and said, Rahul, if you are going for surcharge, surcharge is for 0 to 50 lakhs, no surcharge. 50 lakhs to 1 crore, it is 10%. After 1 crore to 2 crores, it is 15%. From 2 crores to 5 crores, it will become 25. If you are under alternate regime, then after 5 crores, you will be liable for 37%. The 25 and 37 will not apply on 4 kinds of income, being 112A, 112, 111A, and dividend incomes. These 4 incomes are not liable for your enhanced surcharge, will become taxable only at a maximum rate of 15%. If your income goes beyond 2 crores, normal will be taxable minimum at 15%, can become 25 or can become 37 This is what we ended our discussions with. Any doubts? No. At this point, we also came and clarified that if you are under default regime, you are also eligible for something called as marginal rebate, whereas if you are under default or alternate regime, you have an eligibility of marginal relief for surcharge cases. Marginally for surcharge cases. This is where our discussion ended. Yes or no? Can we go forward? Can we go forward? Yes. We are moving on to the next category of people. One is called as, let's do one thing. Shall we do special taxes first? Yes, because if I do companies and all, then I have to go to special tax regime. So let's do special tax rates first. Yes, let's do the special tax rates first, where income tax is basically come and told that, see boss, I understand that you are taxable at slab model. I understand that you're taxable at slab model, but I have some special incomes which I feel a little close to me, and therefore I don't want to keep it as a part of my slabs. I don't want to keep it as a part of my slabs. I would like to tax it as per the income tax itself. And therefore was notified something called as chapter 12. Where in chapter 12 they came and said, I will now give you special incomes on which I want to collect taxes. Some big amendments coming in the current year for this, and therefore please pay attention. The first thing is called as capital gains. Where this year somehow Nirmala ma'am came and said that when it comes to capital gains, I want to simplify it. There are multiple rates, multiple ways to do it and everything. So I'm feeling it a little complicated. Let me simplify it. The only problem is she tried to simplify this during the final budget. And therefore your exams got screwed. Because now you are not just reading new rates, you are reading the old rates also. So now you are having a headache to read the old rates also, you are having the headache to read the new rates also, only for your attempt, people. If you choose to ignore that attempt and go for the next attempt, then it will become easier for you. That is your choice. Yes, I am coming and telling that, Rahul, what are the capital gains? You have LTCG under section 112A. Then you have LTCG under section 112. Then you have STCG under section 111A. And then you have, that's all. You don't have anything else, because the other STCG will go part of your slab itself. Yes or no? Yes. Here is when Nirmala ma'am came and said, see boss, I'm going to bring the changes only from 23rd July. So they came and said that if you are going to make any transfer before 23rd July, you will follow the old rates. Help me out with the old rates, people. For 1128 it is 10%. Next, 112 is 20% and 111 is 15%. This is what the old rates were. Yes, later on she came and said, no, let's do one thing. I want to consolidate my LTCGs. It makes no sense that I will have a smaller rate for share market and a bigger rate for others. Let me consolidate and give one common rate. I'll give one common rate. So she decided that 112A will become 12.5% and 112 will also become 12.5%, which means now she comes and says, I have no category of share market and non-share market. I have no category of share market and non-share market. For me, everything is taxable at 12.5%. Whereas for STCG, from 15 it jumped to 20. From 15 it jumped to 20. One of the most stupidest amendments if you come and ask me. Yes, because it is now not simplified. It is more confusing. It is more confusing. Munnadi, I used to come and tell that, Rahul, when it's a share market income, you will be taxable under 112A and 111A at a lower rate. At a lower rate. Whereas if it is not share market income, you will be taxable under 112 or Finance Act at a higher rate. Now, if I have to come and tell you, I have to tell you that if you are having a share market income, you need to tell me whether it's share market from long term or short term. Because if it is from short term, then it is 20. If it is from short term, then it is 20. If it is from long term, then it is 12.5. But if you have any other incomes, if it is long term, then again it is 12.5. But if it's short term, it goes to slab model. It goes to slab model, which means consolidation has happened at long term level, but consolidation has not happened at short term level. So short term also should have changed. Yes or no? As much as you try to combine long term gains together, you should have also combined short term gains together. Why did you keep short term separately then? Correct, not correct? And then if you come and say you wanted to combine, then you should have let it combine. But she says, no, the provision is like this. For whatever incomes you have under 112A, you will be taxable at 10% or 12.5% only in excess of 1.25 lakhs. Only in excess of 1.25 lakhs, which means technically there is no consolidation. You're still showing them separately only. Because for LTCG, everything is taxable. There is no exemption. So which means in LTCG 112, whatever income you earn, everything will be taxable at 12.5. But if you are tax market on share market income, then you will be taxable for 12.5, only above 1.25 lakhs. Only above 1.25 lakhs, which means still the split is there. So which means it doesn't make sense that you gave a different rate. You could have given the same as earlier. Yes or no? Yes or no? The only way she wanted to do it is that she indirectly wanted to tell people that I want to change from 10 to 12.5. I want to give that extra 2.5 to you. So therefore somehow I had to play around. And therefore what I did, I came and said, I'll give you a benefit from 20 to 12.5. Giving you 7.5 ka benefit there by increasing a 2.5 here. Correct? Not correct? Not correct. Because then she came and said, no, if you want to move from 20 to 12.5, you have to let go of all your indexation benefits. So technically government ended up only paying more tax. But then it's a way of telling you things. There was this very famous thing which happened in 2019 when interim budget came. Nirmala ma'am comes on the stage and comes and says, going forward, anyone having income up to 5 lakhs not taxable. Anyone having income up to 5 lakhs non taxable. Everyone thought basic exemption limit changed to 5 lakhs. Everyone thought basic exemption limit is changed to 5 lakhs. News channel is coming and saying, Ini mala 5 lakhs variko no tax. What she did not tell you clearly. She came and told, I'm increasing rebate to 5 lakhs. Meaning if your income is up to 5 lakhs, then no tax. But if your income is above 5 lakhs, it doesn't matter only. It doesn't matter only. Technically she played. But everyone thought ha, who and everything. Yes or no? Yes or no? It takes you and me people. It takes you and me to come and understand that yes, she's only playing around with life. Yes, the only problem is in India, if you don't come and tell directly that you're ending up more taxes, they will sue you. They will break chairs, hit you and other things. So what you'll do, you'll play strategically. You'll come and say, I'll give you benefit one place, but I'll take away benefit another place. Mutual understanding. Mutual understanding. What you don't realize is there is no benefit coming to you at the end of the day. Correct? Not correct? Yes. The point what I'm trying to make people is that understand when in 112A they came and said that I'm going to increase the limit to 1.25 lakhs. They did not just change the limit of 1.25 lakhs for after 23rd July. They also changed it prior to 23rd July. So she came and said in this year, whatever income you earn, whether you earn it before 23rd July or after 23rd July, you can grant an exemption of 1.25 lakhs. You can grant an exemption of 1.25 lakhs. And we already did a question yesterday where we came and decided that if you are going to grant an exemption, it is better to grant it from post 23rd July in order to get the maximum benefits. Clear to go? Clear to go? Yes, the balance is what is there on the screen. You are coming and saying if you have 112 incomes, then it will be taxable at 12.5 post 23rd July or 20 pre 23rd July. Now, just to give you a word of caution, the right side has an exception. Nirmala ma'am also later on, after the budget was passed, brought in an amendment. brought in an amendment where she came and said the 12.5 will become 20% if you choose to claim indexation. If you choose to claim indexation, it may remain at 20% if you choose to claim indexation only for individual and HUF selling land and building which was bought before 23rd July. All those nitty-gritties we'll discuss later. We will not discuss it right now. Anyway, if I have to ask my honest opinion, I don't think it is important for you because this is only relevant to individual and HF, which means it is coming more for intermediate syllabus. It will not be tested in your final level syllabus. I would not trust much upon it, but nevertheless, it is there an amendment. So we'll discuss in capital gains. Not important for your part of it. Yes, that brings me to the next one, which is your STCG under 1 month money, which will be taxable at 15% earlier. Now 20%. Now 20%. Yes or no? Yes or no? Yes. Now, what other incomes do you have for your syllabus? They now came in and brought something called as winnings, which is under section 115 BB, which is under 115 BB, where income tax comes and says that Rahul, if you're going to have any winnings, or if I have to put it in English terms, if you have any casual income, casual income can be from lottery, crossword puzzles, horse race winnings, gambling, then KBC, Kaun Banega Crorepati, yes, quiz shows and all those things, all are covered, will become taxable at the rate of 30%. Whether you are pre or post, it doesn't matter. It will be taxable at the rate of 30%. Yes or no? Yes or no? Then I am moving on forward. You have something called as online winnings, which is your 115 BBJ. Very good. It is your 115 BBJ, which also comes and says that you are taxable at the rate of 30%. Now, if you honestly ask me, online winnings is more like a clarification. Technically, it's a part of winnings only. But what happened is people in India started coming and saying online winnings has become a new business. And therefore it is not casual because I'm putting in efforts. I'm playing long hours and everything. I'm spending my life and everything. I'm buying big equipments and everything. And therefore it is not like casual income. It is a serious income. People are now earning more than here than in CA also. So therefore, this is more like a serious business, and therefore it is not part of winnings. Therefore, what happened is last year in Nirmala ma'am came and said, see boss, I want a tax at 30%. Now you call it serious business, you call it non-serious business, but I want full tax, and therefore she introduced this as a clarification where she came and said, if you are going to have online winnings going forward, it will be taxable at the rate of 30%. Now here is where the question is. If you remember the special incomes properly, special income provisions come and say that this will be collected on the gross revenue. It will be collected on the gross revenue, which means they don't allow any deductions of expenses and all those things. Yes or no? So here is where the big question came. People who are doing online winnings, on what they should pay tax? I'll give you a simple example. Imagine a case where you plan to play the Dream 11 and the cricket game, the Dream 11 game. The requirement of Dream 11 is that first you have to put money, bet on the games and then get back money. Yes or no? So came a scenario where what happened is you put 100 rupees, earned 2 lakh rupees out of it. Question is 30% will be taxable on 2 lakh rupees, 100 rupees or minus of both. It will be done on the net, because please understand people, when you took back the 2 lakh rupees, you actually took back the 100 also. So it's like you put 100, you got back 100. You put 100 and you got back 100. This is like an FD. So can I collect income on that? No, I can only collect income on what you extra generated. This is not an expense, people. Understand, what I am not granting you is expense. What I am granting you is taking back your own money. Agreed, not agreed? Yes, I'm going to give you case scenarios. You're going to tell me how to find out the online winnings, based on which we'll derive the formula. Imagine a case where you're in year one. You decided to put 1 lakh rupees into the fund, which means your opening balance is technically zero because you never started. Now you're going to put money. How much? 1 lakh rupee. You play your games. All games and all you're playing. And this year you decided you don't want to pull out money. At the end of the year, what happened is you went and you checked your account. Bank account or online account. online account. You went and you checked your online account. You found that your closing balance is showing 3 lakh rupees. Your closing balance is showing 3 lakh rupees. Income tax department comes and says pay tax. Pay tax on what? On 2 lakhs. What is the formula? It is closing balance minus opening balance minus deposits. Closing balance minus opening balance minus deposits. Yes or no? Yes. Now you are in year 2. You are in year 2. Did you pull out money? Therefore, your opening balance will be 3 lakhs. So your opening balance is 3 lakhs. This year you decide you will put some more money of 1 lakh. You will put some more money of 1 lakh. How much is your balance you have? 4 lakhs. You closed your accounts and you found that the closing balance is showing 10 lakhs. The closing balance is showing 10 lakhs. How much will be taxable? How much will be taxable? 6. What is the number? How did you get it? Closing minus opening minus deposits. Agreed. Agreed. You are in year 3. Did you pull out money? No. Therefore, your opening balance is 10 lakhs. You again put in some money of 1 lakh. In the middle of the year, you decided you wanted to go for a Thailand trip. And therefore, you pulled out 5 lakhs from it. You pulled out 5 lakhs from it. You pulled out 5 lakh rupees. This is called as withdrawals. You pulled out 5 lakh rupees. Technically, how much should the account have? Technically, how much should the account have? 6 lakhs. But when you checked your closing balance is saying 8 lakhs. Your closing balance is saying 8 lakhs. Now, here is where the question is, Rahul, how much profit did you make? You made a profit of, how did you get the number? It is closing balance plus withdrawals, very good, minus opening balance minus deposits. Yes or no? Yes or no? People don't mug up formulas and all. If you use your head, you will get the answer. Yes, this is what the basis is, where I'm coming and telling whatever you withdrew, that is also your income only. So you add that income to your closing balance, then you remove whatever you have from opening and whatever you have from deposits, you will get the number. People, why are we removing opening balances? Because it got taxed in the prior years. Because it got taxed in the prior years, therefore I am withdrawing. Yes, that is what the whole premise is. Clear enough? Yes. Now, imagine I am in year 4. I am in year 4. How much is my opening balance? 8 lakhs. I put a deposit of 1 lakh. I put a deposit of 1 lakh. I am running my account. But when I was running my account, the owner of Dream 11 came and said, sir, you have been making huge money from my account. You have been making huge money from my account. I am very happy that you are my loyal customer. You are my loyal customer. Unfortunately, I cannot keep giving this app for free to you, because even I want to fill my belly. Therefore, I will have to charge a subscription fee. I'll have to charge a subscription fee. So what happened is the person ended up charging a subscription fee of 50,000 rupees. Ended up charging a subscription fee of 50,000 rupees. How much should your balance show? How much should your balance show? It should show 8 lakh 50. You checked your closing balance. Closing balance is showing 13 lakh rupees. Closing balance is showing 13 lakh rupees. Question, how much profit did you make? How much profit did you make? You made a profit of 4 lakh rupees. You made a profit of 4 lakh rupees. Understand, when I started, I came and told you for special incomes, expenses are not allowed. Expenses are not allowed. So income tax will come and say, boss, even though you paid subscription fee, I don't care. I don't care. I will not give you a deduction of those. Those will remain ignored. Those will remain ignored. So which means my formula will still remain as closing balance minus opening balance minus deposits, which will give me income of 4 lakhs. Rahul, what happened to the 50,000? Swaha. Nothing comes to you. Nothing comes to you. Clear? Clear? Yes. Year number 5. Year number 5. How much is my opening balance, Rahul? My opening balance is 13 lakhs. I put in a deposit of 1 lakh. I put in a deposit of 1 lakh. Yes. Now I am playing my Dream 11 as usual. I am playing my Dream 11 as usual. Imagine you cannot be as lucky as possible that every year you will earn money. Every year you will earn money. This year you were just randomly playing and you realize that the closing balance is actually 4 lakhs. The closing balance is actually 4 lakhs. You went to the top and then you fell down bad. So the income has now become 4 lakhs. Question to you, what is my income? What is my profit? My profit is, okay, what is my loss? Income tax came and clarified that if you are going to make a loss in a year, the loss will be ignored. The loss will be ignored, which means in this case, even though my closing minus opening minus deposit will give me a number of minus 10 lakhs, income tax will say forget the minus. Forget the minus, number becomes 0, no benefit for you. No benefit for you. I would come and say, Rahul, for all these years you asked me to pay tax, no? So this 10 lakhs you could have given me this year or at least next year. They said no. As long as you keep making profit, it is my tax. But the moment you make losses, it is your loss. It is your loss. Why did you make losses is the straightforward question. So therefore they came and clarified that if you are going to end up in a scenario where the formula will end up giving you a negative, it will become negative or 0, whichever is higher. Negative or 0, whichever is higher, or simple words, they'll come and say ignore the negatives. Ignore the negatives. Yes or no? Yes or no? Yes. So Rahul, what is the formula here? The formula is closing balance plus withdrawals during the year or past years? During the year minus opening balance minus, it is called non-taxable deposits. It is called non-taxable deposits. Now in all practical sense, there is nothing called taxable deposits and all, but there is one clarification from the department which comes and says that imagine if you are having two accounts. You may do what? You may withdraw from one account and you may deposit in another account. In that case, income tax came and told that you can do one thing. You can merge both the accounts and show me the total profit. Or technically what you can do, you can ignore the withdrawals here and you can ignore the deposit there. Answer is the same only. The idea is I want to take the profits of the whole year. So they simply coming and using the word non-taxable deposits means the same. Technically does not make a difference. Are you clear? This is what the formula is, but they are coming and saying if negative, then ignore. If negative, then you will ignore it off. Clear? Yes. What are the next items, Rahul? You have something called as unexplained income. This in income tax terms comes and says that whenever you have any kind of income, expense, deposits, investments, assets, cash, anything which you have in your possession, you should be in a position to go and inform the assessing officer the source. At any point of time, if the assessing officer asks you for the source and you are not able to explain the source, whatever is the money which is being asked for a reason will be treated as unexplained income. Imagine if you explain the source, but the officer is not satisfied, he will still call it as unexplained income. Income tax comes and gives a clarification that when something is categorized as unexplained income, the income will become taxable at the rate of 60%. Plus a flat surcharge of 25%, and then you have your cess also. Thereby arriving at an effective tax rate of 78%. This is the first place where income tax has given a clarification that I will give you a flat surcharge. Meaning, I don't care where your income is. If your income is at 10 rupees, 10 crores or 100 crores, I don't care. Everyone will be liable for the same surcharge of 25%. This is what the whole bracket is. Yes. Apart from this, income tax also comes and clarifies that when you have an unexplained income, then no deductions can be claimed. One of the very famous questions which keeps coming in exam. The question is as follows. The question says there is a person called Mr. A. Has decided to get his daughter married. And has therefore put in an expense of 50 crores for the marriage. Assessing officer comes to him and comes and says, dear person, explain me the source of this 50 crores. Where exactly did you get this money from? He tried his level best, but the assessing officer is not convinced. So assessing officer proposes that the 50 crores will become a unexplained income and therefore taxable at 78%. The assessee goes to the officer and comes and says, sir, I'm okay to treat this as unexplained income, no problem. No problem. But at the end of the day, do I have the money right now? No, because I spent for wedding. So please do one thing. You treat my unexplained income as 50 crores and you treat the expenses against the unexplained income as 50 crores. Therefore, make my income as 0 and tax 0. Question, assessing officer can do so, cannot do so. Can do so, cannot do so. Cannot do so. Income tax comes and says the moment the unexplained income expenditure becomes an unexplained income, it will be taxable at the whole, and you will not grant any deductions. You will not grant any deductions. Correct, not correct? Correct, not correct? Yes. At the same time, people, imagine a case where I come and say you that I am running a business. In that business, I am creating a P&L account. And on the expenditure side, I have put something called rent paid to Mohan, 5 crores. Rent paid to Mohan, 5 crores. Assessing officer comes and tells me, show me where did you get 5 crores to pay Mohan? Where did you get 5 crores to pay to Mohan? I said, sir, I don't have the reasons. I just paid. It is there in the P&L. What will assessing officer do? He will first come and say this expenditure is not valid and therefore he will disallow the expense. Then he will come and say, because you did not explain me the source, I will also add the number. And therefore tax it at the rate of 78%, which means what will happen? You will take a hit of 5 crores plus at the same time you will offer to tax 5 crores, which means total technical 10 crores loss. Yes or no? Yes. Option number 2. I am having a business and I am preparing a P&L. In this P&L, there is no expense. But from somehow, assessing officer got to find out that I paid someone 5 crores ka cash. Assessing officer comes to me and comes and says, dear person, you have paid 5 crores cash to someone. Tell me what is it? I said, sir, I paid rent to Mohan, 5 crores. He said, okay, explain me the source. I said, sir, I cannot explain the source. He said, if you don't explain the source, I will treat it as unexplained income. I said, sir, you cannot do that because I never claimed it as an expense itself. If I claim as expense only, you can offer as income, no? So I said, sir, I have not even claimed it as an expense, therefore you cannot offer it as income. Where is the reason to offer as income when there is no expense? Tell me, assessee, right? Not right. Not right, because the moment you have an unexplained expense, it treats as unexplained income. It has nothing to do with whether you claim it or not claim it, because had you claimed it also, I would have disallowed it. And if you don't claim it, I will leave it as it is. In which case, what will assessing officer now do? He will come and say, I will make an addition of 5 crores and I will ignore anything else because there is no claim made. In simple words, if you make a claim, I will disallow. If you don't make a claim, I will ignore it. But the income of 5 crores will end up becoming taxable. Clear, not clear? Yes, this is your unexplained incomes. Apart from that, what else do you have, people? Check your books. What else do you have? You have section 115 BBF, which is called income from royalty. Let me know the page number as well. 59, no? Rates of taxes, last page, people. A. Rates of taxes, last page. Page number 15. Page number 15. You have your special incomes. We have already discussed capital gains. We have discussed your winnings, online winnings, then your unexplained income, and now we are discussing income from royalty. Income tax basically comes and says that if you are a person who's going to earn royalty income, if you're going to earn royalty income from what, Rahul? You're going to earn royalty income from inventions. From what? Inventions. Income tax came and said that if you are a person who has made a new invention, and you're giving this invention to other people for the purpose of getting royalty, I'll give you two options. Option number 1, I will come and say you treat this as a normal income. In which case you will go to a chapter called as chapter 6A, and you will find a section called as 80 QQB. So I'm giving you two options. Option number 1, you treat it as normal income. In which case, whatever royalty you earn, you can treat deduction of 80 QQB up to a maximum of 3 lakhs. Up to a maximum of 3 lakhs. Option number 1. If you choose to claim the 3 lakhs, you will have to tax it as a slab rate model. You'll have to tax it at a slab rate model. Option number 2. I'm coming and saying, if you are okay for me to treat it as special income, if you're okay for me to treat it as special income, whatever income you make, you can tax it at 10% flat. You can tax it at 10% flat. But the moment you tax it at 10%, you will not get any deduction or expenses. You will not get any deduction or expenses, meaning 2 options. Option number 1, claim deduction and expenses and offer at slab. Option number 2, treat it as special income, tax it at 10%. Tax it at 10%. Yes or no? Yes. But there are various conditions in this 115 BBF, and so therefore normally people don't claim it. People don't normally claim it. If you read the conditions, you will understand. The number 1 condition is coming and saying that you should be a resident in India. You should have made the invention in India. 90% of the expenses should have been incurred in India, meaning you should have not made any expenses outside India, meaning you should live in India, stay in India, eat in India, do everything in India and earn from India. If you do everything from India only, I'll give it to you. If you do everything from India only, I will give it to you, and therefore people have technically not been able to claim this as a benefit. No one has been able to claim this as a benefit. People rather go for 80 QQB. People normally go for 80 QQB, where they end up claiming all their deductions and your expenses. Ideally never tested in exam also. But it is there as a provision. Yes or no? Yes, this is the provisions. Can we go forward? Brings me to the last part of the topics, which is called as VDA, which in full form is virtual digital assets, or in our layman terms, cryptocurrencies. There was a time 2 years back where what happened is people had become fascinated with crypto. Everyone is investing in crypto, making crores and crores of money. At the same time, losing crores and crores of money. People at a certain point of time came and said, you know what, cryptos is not capital gains. It's like my normal business. It's like F&O, which means I want to tax it at slab model. I want to give business deductions, because whenever they made losses, they claimed full losses, and whenever they made profits, they made full profits. Everything was being offered as business income, because people came and said, what should I do working as an engineer and all? Might as well sit and do crypto trading. I will get more money than that. So people stopped going to office and all, started only doing crypto trading. 2 years ago, people came and said, boss, crypto has become a nonsense. And therefore, Nirmala ma'am comes to the stage and comes and says, I want to treat crypto as capital gains. With the only exception that it will be taxable at 30%. If you are too fascinated, I am also fascinated, which means I want tax of 30% on it. I will treat it as capital gains, but I will tax it at 30%. Weird logic. And therefore what happened is, this provision came into structure and they came and said, I will tax it at 30%, but with an additional useless benefit. They came and said that although it is capital gains, if you make profit, I will have to pay 30%. But if you make losses, it is your loss. Meaning whenever you trade in crypto, if you get profits from crypto, then it is taxable. But if you get loss from crypto, it is loss. So this is technically like winnings. With an hint of capital gains. How does it work, Rahul? They are coming and saying, how do you compute VDA income? You will take full value of consideration minus cost of acquisition, full stop. Rahul, can you claim cost of transfer? No. Can you claim indexation? No. Which means just to take your full value of consideration minus your cost of acquisition, tax at 30%. If it is negative, ignore. Yes, Rahul, current year, I have a VDA A and I have a VDA B. VDA A made a profit of 5 crores. VDA B made a loss of 4 crores. Can I set off? No. Income tax said, pay tax on full 5 crores, ignore the full 4 crores, your loss. Which means to the extent of profit, I will take it. To the extent of loss, you will bear. Yes or no? In a very, very crude sense, if I have to tell you this is like online winnings. Very crude sense. It's not exactly, but it is somehow like online winnings, because in online winnings also they're telling the same thing. Closing balance minus opening balance, meaning full value of consideration minus cost of acquisition. Take alone that, tax it at 30%, everything else ignored. Yes. Ignored. How can you have loss of 100? Achha, you have two different games. Ignore the one game, the ignore takes. Okay, here is a clarification from CBDT. We will discuss in TDS, but let me clarify it to you. Income tax comes and says that if you are going and having multiple games played, yes, if all the multiple games are being run by the same person, meaning the person who's running the online platform, if it is the same person, then he has to consolidate all your games. In that case, it is not a problem. But if the person is not consolidating all your games, then whatever you make losses, that is ignored. Whatever you make profits, you will take it. If you're, can you create two accounts in Dream 11? So technically, whatever money you earn will be part of the complete same pool only, right? So which means I'm looking at closing balance of the whole pool minus opening balance of the whole pool. Which means, see, basically what they're coming and saying, you will have this in your online platform, you'll have this thing called coins or account or whatever you call it. Yes. Now technically, no matter where you put the money, at the end of the day, account is where I'm checking. So in the end of the year, I will check your account balance. And I'll check your opening account balance, and that is what I'll do. So if you make loss from one game and income from another game, definitely possible, because you're looking at a consolidated level. No. See, because at the end of the day, then if I have to do that for you, then I'll have to sit with you daily basis. I'll have to come and check कि कौन से दिन में तुमने profit किया, कौन से दिन में तुमने loss किया. That's not how it is going to work. Yes. So I'm looking at a consolidated level. That's what I said. If you have to create an account, and in that account you will be given a special bank. I don't know what it is called. I'm a little old for that right now. Yes, you will have that special coins account or something like that. They will check your closing balance of the coins account minus the opening balance of the coins account, and that is what they will tax for you. Clear, people? Yes, this is what your special incomes are. Any doubts, Liam? No, this is what your special incomes are. Now, Rahul, what are the special provisions relating to special incomes? They come and say you do one thing. You consolidate my capital gains, VDA, into one bracket. Consolidate your capital gains and winnings into one bracket, and then you take your other incomes in other bracket. Other incomes in other bracket. I'm going to ask you some simple questions. You're going to tell me what is the answer. Yes. Question number 1. Can you claim any cost of acquisition? Capital gains. Yes. VDA. Yes. Other incomes. Other incomes. No. No expenses allowed. Yes. Can you claim any chapter 6A deduction? Capital gains. No. VDA. No. Other income also. No. Can you claim any losses? Capital gains. Yes. VDA. No. Others. No. Others is no. Can you claim rebate? Capital gains. Yes. Except 112A. VDA. Yes. Other incomes. One of the most weirdest things which has ever happened is that people are eligible to claim rebate even on illegal income. People are eligible to claim rebate even on illegal income, because the provisions come and say that when you have a rebate, how will you have a rebate? If your total income is less than 5 crores, if 5 lakhs, sorry, if your total income is less than 5 lakhs, which means if you are a person who's doing illegal drug trading and you've made a profit of 4 lakhs, can you claim rebate against it? 100% yes, because the provision comes and says rebate is eligible for 12,500 or actual tax payable, whichever is lower. My actual tax payable includes illegal tax also, and therefore you can claim it on that also. The only problem is 112A alone is not allowed. 112A alone is not allowed, and like I clarified to you yesterday, there is some shenanigans going on where in new regime they are coming and saying 111A is also not allowed, but it is not there in the syllabus, so we are not discussing it. Technically you can claim it. Yes or no? Yes. Next, what else? Surcharge. Rahul, capital gain surcharges. Maximum 15. 0 to 15. VDA surcharges. It goes up to 37. Other income surcharges. It goes up to 37 except for illegal, where it is restricted to 25. Yes or no? I'm looking at special incomes. Dividend is a part of slab. It's not covered here. Yes or no? Yes. This is what your whole provisions are. Any doubts? Question, Rahul, optional or mandatory? Capital gains. Can I choose that I want to tax it at slab rate model? No, which means it is mandatory. VDA, mandatory. Other incomes, Very good. Mandatory except for 115 BBF, which means 115 BBF has been given as an optional model where you can choose to go for 115 BBF or normal brackets. Other than that, everything else is mandatory. Other than that, everything else is mandatory. Clear to go? Clear to go? This brings me to the last question, which is called as unexhausted basic exemption limit. Unexhausted basic exemption limit. Understand this one question very carefully, people. Imagine a case where what I'm telling is I am coming and telling that my normal incomes is 2 lakh rupees. My normal incomes is 2 lakh rupees. I have planned to have a capital gains of 10 lakhs, which means my total income becomes 12 lakhs. My total income becomes 12 lakhs. Now, you know, on the slab rate income 2 lakh rupees, tax is 0 because my basic exemption limit is 2 lakh 50. 2 lakh 50. But then my balance tax on 10 lakhs will be fully calculated. My balance tax on 10 lakhs will be fully calculated. Now, here is where, as an assessee, I go to department and I come and say, dear officer, you promised me that I will not pay any tax up to 2 lakh 50,000. But you are now coming and telling me to pay tax on the full 10 lakhs. On the full 10 lakhs, which makes no sense because I only got a benefit of 2 lakhs, which means I lost a benefit of 50,000. Therefore, I need that benefit of 50,000 back. I need that benefit of 50,000 back. Here is where income tax in the sections 111A, 112 and 112A gave a clarification that if you have not exhausted your basic exemption limit, if you have not exhausted your basic exemption limit, you can take a certain amount of income from capital gains and put it into the basic exemption limit, thereby not paying tax on those. However, this provision is only applicable if you are a resident individual. This provision is only applicable if you are a resident individual. In a very crude sense, in inter and all, I tell my students that this is like Kaju Katli. This is like Kaju Katli. Basically, what is the background, people? Imagine a case where there are family members in your house and there are guests coming to the house. The first thing which your mom will come and tell is, go buy sweets and come. Go buy sweets and come. You will come and ask a question. Okay, ma, how much do you want? How much do you want? She comes and says, there are 5 guests coming, therefore you buy 5 sweets. Now you are feeling bad because I also want, no? Yes or no? But mom sold 5 only, so no options. Therefore, you do what? You go and you buy 5 sweets and you come. You go and you buy 5 sweets and you come. When you come back, the sweets are offered on the table. Guests are there. What is the mind going on? At least one of them should not eat it so that it comes to me balance. Yes or no? Yes or no? So you go, you offer. But then as a courtesy, what will you do? Please have, this is special sweets from special place. Special item, therefore please take. Now the moment you give that statement, what will happen? They will start taking, obviously. No one is going to say no to it. Yes or no? So what happened? Guest number 1 picks up the sweet, takes it. Guest number 2 picks up the sweet, takes it. Now your heartbeat is increasing because 4th sweet, yes or no? 3rd sweet gone, 4th sweet gone, 5th sweet, now you have to take an action. You cannot do it. Yes or no? So 5th sweet, what you will do? You will go to the guest and come and say, I heard you have diabetes, no? Correct, not correct? Yes. And then you will come and say, maybe this is a little risky because diabetes and all, you should avoid sweets and all. Yes. And I am your very loyal child. So therefore, I will want the best of you only. Yes. Now, when you have given that statement, do you think the person will eat? Yes. Guests are leaving. What will you do? You will not go say bye-bye and all. First, you will go and jump on the sweet only. Correct or not correct? Now, think about it loud. You also have parents at your home. Did you ever think of giving the sweets to your parents? No. You decided that if a sweet is pending, it is mine. Even if the sweet is there, let's assume 2 Kaju Katlis are there. Still, you will not give it to parents. You will keep 1 for today and 1 for tomorrow, but you will not give it to them. Even though the sweet may get destroyed tomorrow also, but you will still keep it for yourself only. Yes or no? Yes or no? Yes. Now, categorize these 3 people. First person was your guest. Second person was your self. Third person were your parents. People who are coming from outside are getting first priority. If they are not able to complete the priority, people who are getting it is self. And if nothing comes also, you will not give it to parents. Yes or no? Yes or no? Think, Rahul. People who are coming from outside is like Finance Act. Rates are from outside. The rates which are in-house are capital gains and others. Hey, which one is smaller? Capital gains, which means you are capital gains. Everyone else is parents. Everyone else is parents. Basically, I'm coming and telling when a Kaju Katli comes, always give it to Finance Act first. If Finance Act cannot utilize, give it to the smaller child, which is capital gains. If capital gains is also not able to utilize, then let it go. No one else is getting it. No one else is getting it. Either I get it or no one gets it. Yes or no? Yes or no? Either way, if you imagine a case where you are a child sitting in India and you have a brother who has been sent to US to work, what will you do? You will do? You will open your WhatsApp, take photo, send, see Kaju Katli and all I'm having, nothing for you. Yes or no? Yes or no? Resident child will get everything. Non-resident child gets nothing. Non-resident child gets nothing. Tell him to get lost from here. Yes or no? Yes or no? Point what I'm trying to make people is that when you have an unexhausted basic exemption limit, capital gains gets benefit, BDA gets no benefit, other income gets no benefit, but a capital gains will only get benefit if the child is a resident child. The child is a resident child. Question: in exam, will they come and tell you that you have to use Kaju Katli? No, you have to use it yourself. You have to use it yourself, because if you don't end up doing it, you will end up paying more tax. You'll end up paying more tax. This is your headache to find out. This is your headache to find out. Correct, not correct? Clear, not clear? Sure. Question number 7. Question number 7. Question number 7. Tax for Mr. A. Tax for Mr. A, resident individual. Tax for Mr. A, resident individual, alternate tax regime. Tax for Mr. A, resident individual, alternate tax regime. Alternate tax regime has the following incomes. Has the following incomes. Has the following incomes. PGBP is 1,50,000. PGBP is 1,50,000. LTCG under section 112. LTCG under section 112 prior 23rd July. LTCG under section 112 prior 23rd July. What is the tax rate, people? LTCG under section 112 prior 23rd July, 2 lakhs. Prior 23rd July is 2 lakhs. Then LTCG under section 112A. LTCG under section 112A prior 23rd July. Prior 23rd July. 1,40,000. 1,40,000. Total the numbers, people. Total the numbers. 4 lakh. Super. Go. Numbers. 9360, 9360, 10,000, 920, 11,960. The fun of this question is all the answers are right. The fun of this question is all answers are right. It is all about telling how much of a good CA are you. It is about you coming and telling me how can you save me the most of the taxes, but still be legal about it. You will have to give me that answer. Yes, I am looking for that one answer where you can give me the least of the taxes. I don't know. It can be lesser than this also, but I am just saying. Numbers, people. Let's see how good of a CA are you. I know. That's the problem. No, if you start mugging up what we have done in the past, then what is the point? Numbers, people, everyone else, Manav. 60. Okay, great. If you're going to get a number above this, then I don't want it. Don't think too much, you won't find it in the books. आपको मिल गया तो मिल गया, वरना छोड़ दो. Okay, time's up. Let's look at the question once again carefully, people. We are looking at a total income. What is the total income? 4,90,000. Now here is where the comedy is. When the income becomes 4,90,000, you know one thing, that the person is a poor category, which means he is eligible for rebate. But if you notice this carefully, the question is also having 3 incomes, and therefore you need to now categorize your incomes into understanding which is eligible for rebate and which one is not. If you look at the questions, you have the last person being 112A, therefore not being eligible for rebate. Now here is where the question is. When you know that your basic exemption limit is only 1,50,000, you have not used your basic exemption limit to the extent of 1 lakh. Yes or no? Now here is where the question is. You have 1 lakh and you can use it against capital gains. Which of the capital gains is the question now? Now because there is no clear answer, people would normally come and say it is better to use it as higher priorities, which means the one which has more tax is better to utilize first, because then you will not pay tax to that extent. Which means in this case, you will normally come and tell me that, Rahul, it is better to use 112. You will tell me it is better to use 112. But if you do that, that's where you're lost. That's where you have lost it, because understand, the more you put 112 inside the slab, the more you are going to keep 112A outside to tax. And the more you keep 112A outside to tax, you are going to lose rebate benefits. Yes or no? You're going to lose rebate benefits, which means, understand, I want to pay tax in such a manner where I should be able to claim best of the rebates. But at the same time utilize all my benefits. Yes or no? Take an example where I do it as per your normal method. What is a normal method? You will come and tell me, Rahul, let's do one thing. I will push 1 lakh from 112. I'll push 1 lakh from 112. How much is the number? Slab rate becomes 2,50,000. Which means tax on slab rate is 0. Leaves me with 112. How much? 1 lakh will be taxable at the rate of 20%. Number becomes 20,000. Now ask yourself a question, Rahul, how much is my rebate? 12,500, which means I should be able to utilize 12,500 in some way. I am now coming to 112A. How much is my income? 1,40,000 minus 1,25,000 at the rate of 10%. Number becomes 1,500. Therefore, total is 21,500. Now you are kind of lucky in this. Because you now have an eligible rebate of 12,500, which you will utilize against 20,000 or 1,500. 20,000. Do you have enough? Do you have enough? Which means you utilize the whole 12,500, thereby arriving at a tax of 9,000, claiming a cess of 360, taxing it at 9,360. Taxing it at 9,360. Correct? Not correct? Correct? Not correct? Yes. This would be the most optimal way to do the taxes, where you are ensuring that you are utilizing everything properly. The slab also, the rebate also. The slab also, the rebate also. Yes or no? Yes or no? So here is a case where I'm coming and telling, when you have two capital gains and you don't know which one to utilize it in the best optimal manner. Utilize in the best optimal manner. Any doubts still here? No? No? Rework question. Question number. Question number 8. 8. Question number 8. Your PGBP is 1,50,000. Your PGBP is 1,50,000. Your long-term capital gains is 70,000. 112. 70. Before, obviously. Wait, 1 second. I told 70 after. 70 with an after. 70 with an after. 112 is, I want 4,90,000. What is the difference? 2 lakh? 112 is 2,70,000. Always alternate. Same. What was this? This was after, then after. So I think my PGBP is 1,50,000. My LTCG under section 112 after 23rd July is 70,000, and my LTCG under section 112A after 23rd July is 2,70,000. One five. अच्छा 5850. Numbers. Okay. Anyone else? Same numbers? Same numbers? Okay. Let's see how this is done. We are looking at my total income. Again, my total income is 4,90,000, which means again the person is eligible for rebate. The person is eligible for rebate. With the person being eligible for rebate, now here is where the question is. I want to try to figure out what to adjust inside. What to adjust inside. If I do the normal route, what will I come and say? I will adjust 112 inside. I will adjust 112 inside. How much if I adjust 112 inside? 2,30,000 becomes, which means you now have extra 20,000, which you will take from, sorry, 2,20,000. I am adjusting 70 inside, which means it becomes 2,20,000. I have extra 30, which will come from 112A. So 112A ka how much? I will say 2,70,000 mein se I will remove 30,000 because that is going inside, which means now I have an income of 2,40,000, which I have to offer to tax, in which I am exempted for 1,25,000. I am exempted for 1,25,000, thereby 15,000 will be taxable at the rate of 12.5%. Number becomes 14,370. 14,370. Now the problem with this is that the only income which is left for taxation is 112A, which means no rebate benefit. No rebate benefit. I lost completely benefits of rebate. Am I okay with this? I want to claim my rebates. Yes or no? So what will I do? I will say this method is wrong. I will say this method is wrong. I want to utilize my rebate, and I know that I can only utilize my rebate against 70,000. So what will I do? I will come and say, boss, I will not adjust 112 itself. I will not adjust 112 itself. I will try to put 112 outside for taxation to the extent I can claim rebate. To the extent I can claim rebate. 70,000 into 12.5 number is 8750. Now if I use this 8750 outside, I can claim full rebate. I can claim full rebate. So what will I choose to do? I will say I will not use 112. I will use 112A. So what will I do? I will now push 112A inside to the extent of 1 lakh, which means now I have two incomes to offer. One is LTCG under section 112 of full 70,000 at the rate of 12.5%. Number becomes 8750. And 112A, I have 2,70,000, decided to push inside 1 lakh, decided to push inside 1 lakh, leaving me with 1,70,000, in which I will not be taxable for 1,25,000, leaving me with 45,000 at the rate of 12.5%, leaving me with a tax of 5,625. Total becomes 14,375. 14,375. Now I am eligible to claim rebate to the extent of only 8750, because I cannot claim rebate on 5625, which means I will claim rebate on 8750 completely, indirectly coming and saying I will offer to tax 5625, add a cess on this 225, leaving me with a tax of 5850. Notice in the prior question, when we did the normal way, we ended up paying tax on 14,500 plus cess. In the second method, we are only paying tax of 5850. Rahul, which of the two is right? Both are right. The only difference is in the first method you decided to push LTCG inside and therefore you ended up paying more tax. And in the second method you decided to push 112A inside in order to save more taxes. Rahul, which one is right? Both are right. Technically what you did, you just played around with the numbers in order to make the optimal taxes. This is how you work in a CA model, people. You can find the best ways in both the approach, but the way where you can offer the lowest of the taxes is the way where you can save more money, and that is when clients will be happy to come to you, because you have found the best way to save taxes but not being illegal also. Yes or no? Put a note. Where ideally it is beneficial to, where ideally it is beneficial to utilize, where ideally it is beneficial to utilize 112 against the basic exemption limit, where ideally it is beneficial to utilize 112 against the basic exemption limit. In the current question, opting for the same will result in offering to tax the whole of 112A, since 112A is not eligible for rebate. Since 112A is not eligible for rebate. Since 112A is not eligible for rebate. In such a case, it would rather be beneficial to, offer to tax LTCG under 112A, offer to tax LTCG under 112A to the extent the rebate can be fully utilized. To the extent the rebate can be fully utilized. To the extent the rebate can be fully utilized. To the extent the rebate can be fully utilized in order to have the most optimal saving of taxes. In order to have the most optimal savings of taxes. In order to have the most optimal savings of taxes. Again, people, not exam related questions. These are all practical questions and some smart ways to answer questions. Can we go forward? Yes, I'm going to give you one more question. Let's see if you can answer this question. Same kind of logics, but a little complicated. Yes, I am looking at the question being PGBP of 1 lakh, 112A of 2 lakhs, 112 of 1,30,000 and 111A of 40,000. 111A of 40,000. All the three items which are given are prior 23rd July. All the items are prior 23rd July. Let's see who gets the least. Four, 6, 8, 0. I'll teach you to use your head before Excel also. No tax. Okay. Even I don't have an answer to that. Nine double eight. See, if you can get lower than this only, it makes sense. Zero. Mass. तुम 112 ये रख के 0 लाई कैसे, मेरे को पता नहीं. Hey, quick people, if you get the answer, you get the answer. Otherwise, you won't get the answer. Custom. My feeling this is the right answer, but I don't know. I'll have to check. You don't need to. I can touch you another way. Done, people. Done, people. Can I take a chance on this? Yes. Let's take a chance, people. Let's understand this once again carefully. We are looking at my total income being 4,90,000, which means the person is eligible for rebate. The person is eligible for rebate. Now, in a model where the person is eligible for rebate, I also need to appreciate the fact that we have 3 capital gains right now to be adjusted against my slab income. To be adjusted against my slab income, which means my slab income being 1 lakh, I have 1,50,000 worth of buffer, and I can use any of the 3. I can use any of the 3. Yes or no? Yes or no? Now here is where the question is. And a normal practice, I would have come and told adjust always 112 first, because other tax rate is 20%. Then I would say adjust 112A because the tax rate is 15%. And then I would ask you to adjust 112. I'm sorry. I would ask you to adjust 111A because it is 15. And then I would ask you to adjust 112A because the tax rate is 10%. But the only problem is in this question you have a rebate, which you know is not eligible for 112A, and therefore I would not risk that. I would not risk that, which means I know I would like to keep so much of capital gains outside that I can claim a rebate. I would like to keep so much of capital gains outside which will give me a rebate. Now, question is, which of the capital gains can I offer to tax to claim rebate? I can offer 112A also, 111A also. Now, here is where the question is, Rahul, which one to offer? Which one to offer? I don't know. I don't know. Yes, here is where you have to do a reverse working calculation. You'll have to do a reverse working calculation. Let's do one thing. Let's first find out what is the tax on both. Let's first find out what is the tax on both. In 112, if I offer it fully outside, what is my tax? 1,13 to 20%, number is 26,000. And 1118 is 6,000. Yes or no? Yes or no? Yes or no? Yes. Now ask yourself a question, Rahul. I can offer both. I can offer both, but I only want 12,500 of benefit. I only want 12,500 of benefit. So which means I have to play a combination in such a way where I can only offer 12,500. I can only offer 12,500. Option number 1 is I will say, Rahul, I'll offer full 112. I will offer full 112 and therefore will fully get utilized, which means 111A I will push inside 2 basic exemption. Inside 2 basic exemption. Option number 2, I will come and say, I will keep 111A to offer and then push 112 inside, then push 112 inside. Think about it strategically. Think about it strategically. How much is 111A? 40,000. How much is 111A? 40,000. Yes or no? Yes. If I have an income of 40,000, I will pay tax of 6,000. If I take the same 40,000 in 112, how much is my tax? 8,000. Yes or no? Which means if I offer more income, I'm paying lesser tax. I'm paying lesser tax. Now, Rahul, why am I making this decision? Because please understand what you need to put inside the basic exemption is tax as income. Income, which means the more income you keep outside, the more income you keep outside, the more income you will have left for utilization in the slab. The more income I offer to tax, the more space I will have in my basic exemption limit. Yes or no? Now ask a simple question, Rahul. If I offer LTCG to tax, I would only offer 4,000 to get a tax of 8,000. Whereas if I offer STCG to tax, I will offer 40,000 for only 6,000, which means I'm getting more benefit to offer in STCG. I'm getting more benefit to offer in STCG. Priority to offer STCG. Hey, I'll put it this way. When rebate was not there, what you would have done? You would have put 112 inside, then 111A inside, then 112A inside. I'm doing the same logic. If I'm saying 112 should go outside, which means 111A should remain outside. Correct? Not correct. So which means in order of priority, I will offer 111A outside. In priority, I will offer 111A outside. Which means now I'm deciding, Rahul, this full 111A will be offered to tax. How much am I going to tax? 6,000. How much is still left? For rebate, how much is still left? 6,500 is left, which I will utilize from 112. Yes. Now I know my tax rate is 6,500. How much income should I offer in order to have tax of 6,500? How will you find out? Reverse work. Income into 20% is 6,500. Therefore, tax divided by 20% will give you income. So 6,500 by 20% will give me 32,500. Which means if I offer LTCG of 32,500 and STCG of 40,000, my tax will become 12,500, which I will fully claim as rebate. Option number 2, where you said, Rahul, I will fully offer 112. What would have happened? My tax was 12,500 divided by 20%. You would have offered only 60. Look at it. Option number 1 you are offering 70 to 500. Option number 2 you are offering 60 to 500. Because of that difference, your slab is getting less utilized. Better to offer option 1. Correct? Not correct? Correct. So what is my order of priority, Rahul? I will come and say in the slab, I will offer 1 lakh. That has to be done. What I will keep outside? I am deciding to tax what? 111A of full 40,000 and I'm offering 112 of 32,500. This I have decided to offer because on this tax will be 12,500, which will fully get utilized as rebate. Now I have still some income left. From 112 also and 112A also. Order of priority 112. Order of priority 112 because 112 is taxable at 20%. So push 112 inside. I have already decided in the 112 of 1,30,000. I will Offer to tax 32,500, which means I will not offer to tax 97,500, which will go into my slab. Which will go into my slab. Correct. Correct. What is my total? 1,97,500. How much am I still left? How much am I still left? 52,500, which will come from 112A. So 52,500 will come from 112A. Now I know that 52,500 is coming from 112A, which means how much of 112A do I have to offer to tax? 1,47,500 I have to offer to tax. Yes or no? Yes or no? People understand. Normally I will go from state method. I will first take income and then find out tax. Here I am doing ulta. I am first keeping my tax and finding out an income. I am keeping out a tax and finding out my income, playing with a combination which can give me the most optimal savings. Playing with a combination which will give me most optimal savings. Yes or no? Yes or no? Now how much is my income left, Rahul? This is what I have to offer to tax. This is what I have to offer to tax. 40,000 will be taxable at the rate of 15%. Number becomes 6,000. 32,500 will be taxable at the rate of 20%, which will give me 6,500. Hey, this I already knew because Nanda Kanda Purcha. I only found these numbers out, which leaves me with only this one, where I have to not offer 1,25,000 at the rate of 10%. Number is 2250. 2250. Yes, this is what my tax is. How much is my tax, Rahul? Total 14,750, in which I have to claim a rebate. Question: in the three, how much can I claim rebate? Because that is what I offered. So which means I will claim rebate of 12,500, leaving me with a tax of 2250, which is nothing but 112A. Nothing but 112A. Add cess on this number is the most optimal taxes to pay. In the same combination you tried, in the same combination I tried, you got 4,000 something, I got 2,000 something. Are you right or am I right? Both are right. Who will get the client? Rahul will get the client. Yes or no? Yes. It's a simple maths, people. It's a simple maths where instead of going from the top down approach, I now went from bottom up approach. I went from bottom up approach. In a best optimal manner, I'm trying to find out where is the case where I can offer 12,500 to tax in order to claim the rebate. In order to claim the rebate, while also ensuring that I have sufficient buffer in my income slab. Sufficient buffer in my income slab. Yes or no? Yes or no? Yes. Playing around with numbers, nothing else. If you understand this, you understand this. You wrote the fake the bookie. समझ गए ना? You wrote the question wrong. Throw the book off sometime. People, anyone having a confusion on what happened? Is it clear? Yeah. Is it clear? Yes. In simple words, what I'm doing, I'm keeping a 12,500 of tax to be remaining outside. For that 12,500 of tax, I'm trying to find out which income should I offer to tax. And I'm choosing the method of going the priority. In the priority, I'll always offer more income to slabs, which means I'm choosing to keep outside lesser tax rate incomes. And therefore, I decided to first keep 111A outside, and then I utilize the balance from 112. I utilize the balance from 112. Then I came back with my priorities and chose to put inside 112 and then put inside 112A in order to get the most optimal taxes. Most optimal taxes. These are the kind of questions which you should need to practice once again so that you understand what is happening. Yes. Again, not relevant for exam, but showing off, nothing else. You don't need Excel always. You just need to use your head always. I know. I remember in the batch I took, I did it in Excel, right? That time even I was trying to learn only. That time I did in Excel. Next attempt I also realized how to do it simpler. It's a learning journey. The only difference is in that question it was 112A was at 10%, right? It was not at 12.5. I'm sorry, 112A was 1 lakh and not 1,25,000. So there I think I got a tax of 3,910 something. Done everyone? Done everyone? Yes. Try it out once again from your side to see if you understand this better. Good enough? Good enough? Sweet. This marks the completion of your tax rates on individuals. This marks the completion of your tax rates on individuals. Yeah, I mean, on an exam standpoint, if you come and ask me, is this extremely crucial? I would say no. I would say no. But do you have to know this? A little bit, yes. A little bit, yes. When I say little bit, yes, I'm only talking from the perspective of double taxation. From the perspective of double taxation. And from a perspective of double taxation, ideally, ICAI does not test you on rebate or surcharges and all those things. They keep a very simple, plain question on slab rate model. Yes. So they keep it very simple. The only thing which predominantly they test you is on difference between default regime and alternate regime. That is the kind of questions which you can expect. Plus, since your special incomes have been changed in the current year for capital gains, I feel that is going to come for exam. Yes. So what I would say on a priority level you have to read from an exam perspective is the basic slabs of default and the basic slabs of alternate plus your tax rates for special incomes. Yes. This is what I would request you to have on a priority level. Marginal relief, rebate, all those things, not so critical. It will be more tested in inter level. So I don't see it coming in final so much. Yes. They have better things and more complicated things to test in finals. They will focus on those things. Clear enough to go? Clear enough to go? Can we go forward? Yes. Great. We are moving on to the next category of people. We are moving on to the next category of people. We are now looking at other people called HUF, then AOP, BOI, AJP. BOI, AJP. Now, to these categories of people, income tax came and told boss, same model of slab. Same model of slab, which means what slab rate model you followed, the same model you will follow. The only difference is now they don't have this extra benefit of senior citizen and super senior citizen. They don't have the benefit of senior citizen and super senior citizen, which means they have two regimes, alternate, default. Under alternate it is 0 to 2.5, 0, 2.5 to 5, 5, 5 to 10, 20, after 10 it becomes 30. If you go for default regime, it is 0 to 3, 0, 3 to 7, 5, 7 to 10, 10, after 10 to 12 it is 15, after 12 to 15 it is 20, and after that it jumps to 30. These are the only two things there. These are the only two things there. Second, they are saying, Rahul, there is no concept of rebate because no one is a individual. No one is a individual. So there is no concept of rebate. But is there a concept of surcharge? Yes, there is a concept of surcharge. Now in the concept of surcharge, income tax says, Rahul, surcharge will apply as follows. Surcharge will apply as follows. In the four categories of people, if you are found out to be an AOP, what are you found out to be an AOP? Whose all members are company. Whose all members are company. So income tax came and said that, Rahul, if I find out that you are an AOP, you are an AOP where all the members of your AOP are company, in that case surcharge will be same as company. In that case, surcharge will be same as company, meaning what surcharge rate you use for company, the same surcharge you will use here. The same surcharge you will use here. What is that? We will discuss now. We will discuss now. But if it is any other category of people, it is any other category of people. Who are the others? HUF, AOP, BY not having members as company, and AJP, income tax said it is same as individuals. Income tax rate is the same as individuals. That is the only difference. So they are coming and saying, if you have an AOP with only member companies, then in that case the surcharge will also remain as companies. If it is anyone else, then it will be as individuals. It will be as individuals. This is the only thing which you need to know. This is the only thing which you need to know. Rahul, is it important from exam? Zero importance. Absolutely not important. Absolutely not important, because as you progress further, you will learn that HUF and all is not coming for exam. AJP has never been tested in exam. AOP, BY, they will come and say this is wrong. AOP, BY, they will come and say this is wrong. There is no slab model itself. There is something called MMR. There is something called MMR. You will move to something called section number 186. There they will come and say AOP, BY always taxable at MMR. So which means this is just like that given in the Finance Act. But then they come and say 186 come and says we will do it MMR. So therefore you follow MMR. Different chapter, different logics. Right now not important. Therefore ignore. Therefore, ignore. Clear? Yes. Moves on to the other category of people. You have something called as firm. Income tax says firms will be taxable at 30% flat. Firms will be taxable at 30% slab. There is no concept of rebate, but there will be an applicability of surcharge at the rate of 12% if your total income is more than 1 crore. If your total income is more than 1 crore. Question, can you claim marginal relief? Yes, concepts of marginal relief will still apply. There is no difference. Marginal relief can be applied by any person liable for surcharge as long as income is near to the slab where the surcharge is changing. Surcharge is changing. Yes or no? Yes. Again, firms sometimes tested, not so much. Not so much. The critical persons for your exams, we have something called as company. The critical persons which you have for exam is called as company. Now here is where the things change. In company, income tax came and told there are two regimes. There are two regimes. One is called as old regime and one is called as new regime. One is called as new regime. Yes or no? Yes or no? Rahul, now what is an old regime, Rahul? Income tax is coming and saying under old regime you have two kinds of companies. One is called as domestic company and one is called as foreign company. Whereas in new regime you only have one company which is called as domestic company. You have domestic company, but this domestic company is split into two categories. The domestic company is split into two categories. One is called as section 115 BAA and one is called as 115 BAB. One is called as 115 BAB. What and all we'll discuss right now. Let's start from the top. I am telling that Rahul, you are a domestic company under old regime. Under what regime? Under old regime. Income tax comes and says, in that case, you have to tell me what is your previous year turnover. What is your previous year turnover? Now here is where the comedy happens. Income tax came and told that, boss, I want your previous year turnover. But you would like to know your tax rate on the first day of the year itself. On the first day of the year itself. So can you take the current previous year as your income base? No, you can't do that. Yes, what exam are you writing for, people? You're writing exam for 24, 25 previous year and assessment year 25, 26. Yes or no? Yes. So here is where income tax came and told, boss, for previous year 24, 25, I cannot ask you what is the previous year 24, 25 turnover because then I will not know what is the tax on the start of the year. On the start of the year. So they came and said, okay, you take the previous year 23, 24 order turnover. You take the previous year 23, 24 order turnover. For that, income tax department said, no, I don't want to do it. I don't want to do it because please understand, 23, 24 order turnover. When will you declare to income tax? You will declare to income tax only on 31st October 2024. Income tax is saying, I want to know the tax rate on 1st April. I want to know the tax rate on 1st April. You are only declaring it on 31st October, which means for 6 months, I don't even know what is happening. I don't even know what is happening. So I don't want previous year 23, 24 also. I want previous year 22, 23. 22, 23. In simple words, income tax came and told for domestic companies, I don't want the turnover of last year. I want the turnover of last to last year. I want the turnover of last to last year. If you come and tell me that the previous year turnover of last to last year was 400 crores, up to 400 crores, income tax says the tax which will be levied is 25%. The tax which will be levied is 25%. And if it is not such a category, if you are in others bracket, you will be taxed at 30%. You will be taxed at 30%. Yes or no? Yes. Now, from a practical standpoint, Rahul, how do you remember it? How do you remember it? It's very simple. Understand, when you're preparing the financial statements, of 24, 25, Companies Act requires that you also disclose 23, 24. Companies Act also requires that you disclose 23, 24. Now, for those who have understood Companies Act properly, the provisions of Companies Act come and says that you can also modify 23, 24 order data for better presentation. I would like to say that then in that case, I would not like to rely on 23, 24 because what will you do? You would have modified the turnover in order to get 25%. And you will come and say, no, Companies Act permits to modify, therefore I modified. So therefore they came and said, let's do one thing. You give me the turnover which you cannot modify. The only turnover which you cannot modify is outside the books. Outside the books is 22, 23. Yes. So whatever data you're going to show in your Companies Act financial statements, I don't want that data. I want the data before that. I want the data before that, which will become 22, 23. Please understand, people, this changes every year. This changes every year, which means next year it will become 23, 24, then it will become 24, 25. Previous year was 21, 22. That's how it works. That's how it works. It changes every year. Yes or no? Yes. Now, in all honesty, while I'm telling you this, to be very honest to you, this was a mistake. To be very honest to you, this was a mistake. When the first time they introduced this amendment, they actually came and said previous year 17, 18, you have to use as a basis for assessment year 19, 20. For assessment year 19, 20. Next year, when they were passing the finance budget, they by mistakenly forgot to change that. To previous year 18, 19. They kept it as 17, 18 itself. And what happened? You passed the act also. Now you cannot change it. And income tax should not feel like they've made a mistake. They should not go and tell people that. Yes or no? So what happened? They came and said from that year, okay, no problem. We'll do 2 years before. Let CS go and justify it in classes. How do you answer it? That is why I'm applying all these things with you. No one has come and told that logic, people. Understand? Yes. Nowhere in assessing officer language did they come and say, I want 1st April and all. Basically, 1 year they came and brought 17, 18. Next year they forgot to change it to 18, 19. So which means for 2 years I was checking the same turnover of 17, 18. And then from 18, 19 it became abdiya. A blunt mistake from Finance Act, but that's how it goes. Sometimes when you make mistakes, we have to sit and justify to you people because you have to write exams. But that is how the logic is. Clear enough? Yes. So the first thing which you have is that they are coming and saying, Rahul, if your previous year 22, 23 turnover is less than or equal to 400 crores, your tax rate becomes 25%. If not, your tax rate becomes 30%. Clear enough? Second, they are coming and saying, Rahul, no, I am actually a foreign company. Until last year, income tax said if you are a foreign company, you will have to pay tax at the rate of 40%. Current year budget amendment, they come and says, no, I think I want to promote foreign companies to come to India. Therefore, I am now reducing the tax to 35%. I don't know which foreign company is ready to come to India just because they are ready to pay 35%. No one will come. Because understand, when you go to non-resident taxation, I will itself come and tell you, these same foreign companies are paying taxes at 10%, 20%, 15% also. But for business alone, they are paying 35%, 40%. In that case, they'll come and say, why the hell should I do business in India? I could rather earn passive income. And the passive income, I'll only pay 10 and 20%. Might as well, let's do that and close. No one wants to pay tax at 35%. Yes or no? Adhika, if they had registered themselves as domestic company, they would have paid only 25 and 30%. Or maybe if you go for new regime, you would have paid 20%, 22 also. Yes or no? Yes. Unnecessary, they're coming and saying, no, you become a foreign company. You come to India as a foreign company, I'll give it to you. They said, get lost. I don't want to do it itself. 35 is still not attractive. But it's a slow change. Clear? Now, Rahul, what is the surcharge brackets on this? Income tax is coming and tell me who you are. Are you a domestic company or a foreign company? Income tax says that if your total income falls anywhere between 0 to 1 crore, domestic company will pay no surcharge, foreign company will also pay no surcharge. If your turnover is between 1 crores to 10 crores, domestic company will pay surcharge of 7%, foreign company will pay surcharge of 2%. If you are having a total income above 10 crores, domestic company will pay surcharge of 12% and foreign company will pay surcharge of 5%. This is all under old regime. It is not under new regime. Clear? This is what the provisions are. I'm coming to that. Clear to you? This is what the provisions are. What are the provisions, Rahul? If you have a domestic company with a previous year turnover of 400 crores for 22-23, you will have to pay 25. Illinois, you have to pay 30. Foreign company will pay 35. The surcharge rates are 0, 7 and 12 for domestic and 0, 2 and 5 for foreign company. Good enough? Question number. Why would I answer those questions? You will solve and tell me. Question number people 10. Question number 10. Question number 10. A Limited incorporated on 1st May 2023. Incorporated on 1st May 2023 as a domestic company. Has a total income of 1 crore 5 lakhs. Has a total income of 1 crore 5 lakhs for the previous year. 24-25. For the previous year 24-25. Find the tax under old regime. Find the tax payable under old regime. Of which year? You need turnover of 23-24. 300 crores. You asked me, I gave you. $27 lakh 30,000. Round off number. Huh? Three 500. 29 21 100. Okay, people, there are hardly any slabs in this. Complete the answer quickly. அசிங்கமா திட்ட போறேன் நான். Done everyone? क्या आया? Yes, okay. I am looking at a domestic company with an incorporation on 1st May 2023 having a turnover of 300 crores. Total income is 1 crore 5 lakhs. Total income is 1 crore 5 lakhs. Because this is a domestic company, I'll have to tax it under old regime with the rate of 30. Will be taxable at the rate of, pick a guess, 20, 30%. Now, if you ask me honestly speaking, it is 25. If you ask me honestly speaking, it is 25, but ICI has a different interpretation to this. Understand, the provision comes and says where the previous year 22-23's turnover is 400 crores, you will be eligible for 25%. Where the company itself is incorporated in 23-24, there is no turnover of 22-23. There is no turnover of 22-23. Now, there are two school of thoughts. School of thought number one comes and says when there is no turnover of 22-23, it is assumed that the turnover is 0. Second school of thought comes and says there is a difference between 0 and not applicable. There is a difference between 0 and not applicable. Here is a case where it is not 0. Here is a case where it is not applicable. And the moment it becomes not applicable, it automatically goes to others. It automatically goes to others, because if you understand, the provision does not say that 22-23 less than 400 crores is 25 and more than 400 crores is 30. The provision says less than 400 crores is 25 and any other person is 30. So ICA takes an interpretation where they come and say because the turnover is not applicable, they automatically fall into others category. And the moment they fall into others category, it ends up becoming 30%. Now this, in very honesty, is ICI's interpretation. If you come and ask me, I feel this is stupid. Because if you come and ask me, for the current year you're telling me the turnover is, for the current year you're telling me the tax rate is 30. But if you go to next year, you will be checking the turnover of 23-24, where if you know the turnover is 300 crores, the tax rate will become 25. Now it does not make sense that a person will suddenly have a jumping tax. He can maximum jump from 25 to 30. Can he jump from 30 to 25? Doesn't make sense. A company at any point of time will only keep growing. It will not keep declining. Yes or no? So if tomorrow the turnover is 300 crores, you will pay tax at 25. Next year, if the turnover becomes 400 crores, you will pay tax of 25. 400 crores exactly is also 25. If the turnover becomes 410, you will pay 30. Which means a person can only go up. He cannot fall down. So it makes no sense that current year when you are a startup company, you will ask for 30% tax, and next year when you come and tell the turnover is less than 400 crores, you will say it is 25. Absolutely makes no sense. Yes or no? Yes. In fact, if you are a startup company who is going to just get incorporated, I would rather like to give you 25 and not 30, because I want to promote you to grow more. Either if you come and ask for 30% tax, do you think the person is interested? He's definitely not interested. Correct? Not correct? Second, if you actually notice, for those who have really tried an ITR 6, ITR 6 does not have a question like that. They will not come and say, tell me what is the year of incorporation and then compute tax automatically. They will give you a question. The question will come and say whether the company has a turnover of 22-23 exceeding 400 crores. You will be given a drop down. You will have to select yes or no. If you select exceeds 400 crores, yes, they will compute 30. If you select no, it will compute 25. They will not come and ask you whether you are incorporated that year or not incorporated in that year, which means power to choose is with you. If tomorrow I am filing the ITR 6, for this case, I will come and say turnover was less than 400 crores. They will not auto pick. It is not getting auto picked. Yes. In fact, they are not even coming and asking you whether it is an others category or not. They have a straightforward question. What question they ask? Is your turnover exceeding 400 crores? They did not ask does not exceed 400 crores. Understand there is a difference. They are asking you whether the turnover exceeds 400 crores. I have to only say yes or no. Did it exceed 400 crores? No. Did they ask you that it is not applicable? No. Which means the only answer you can give is no. The moment you give no, it automatically comes to 25. You see the problem? The problem is the act is saying something, the rules is saying something. The rules is asking you to tell whether it is more than 400 crores. The act is coming and asking you to tell whether it is less than 400 crores. The small difference has made an impact. Because here it is not less than 400 crores because it is not even there. But there it is not more than 400 crores because it was not even there. You understand what I said? You understand what I said? Which means indirectly, income tax form itself is coming and telling that you're okay for 25. You're okay for 25. But interpretational laws are okay for 30 also, because that is how it is drafted. That is how it is drafted. In simple English, Rahul, what will happen is when you file an ITR 6, you will end up paying tax at 25. If at all some dispute happens, and only happen at assessing officer stage. If at all any dispute has to happen, it will only happen at assessing officer stage, where you will now have a defense. What defense you have? The form was issued by your boss only. The form was issued by your boss only. Your boss is severity. When your boss itself is coming and saying this is how the form has to look, who are you to come and ask me otherwise? Who are you to come and ask me otherwise? When there is an interpretational issue, the benefit of doubt is going to assessee only. It is not going to officer. It is not going to officer. Correct? Not correct? Supreme Court decision of India comes and says when there is an interpretational issue, the benefit of doubt will always be granted to the assessee unless and until it is an exceptional rule. Unless and until it is an exemption rule. Sorry, not exception, exemption rule. Because there the Supreme Court comes and says when it is about exemptions, you will have to satisfy conditions. You'll have to satisfy conditions, meaning there it will be literal interpretations. There it will not be beneficial interpretation. But cases like these where it is not about exemption, it is about beneficial interpretation. It is about beneficial interpretation. Therefore, if you come and ask me practical world, I will say taxes 25. But ICI standards, you have to go for 30%. ICI standards, you have to go for 30%. Are you clear? Are you clear? Can we go forward? Yes. I am doing ICI standards, people. I have to teach you from exam perspective. Yes, with the caveat that it is not for exam, it is not for your practical. Don't go to your boss, managers, partners and come and say, no, Rahul taught me 30, therefore I will follow 30. No. Taxes at the rate of 30%, number becomes 31 lakh 50 or 15. 31 lakh 50,000, add surcharge at the rate of 7%, number becomes 2,500, total becomes 70500. Quick question, people. Did you check for marginal relief? It is not applicable. It is not applicable. I can straightforward come and tell you it is not applicable. Tell me why. Your increased income is 5 lakhs, whereas your increased surcharge is only 2 lakh 20. Yes, you don't even have to look at anything else. You don't even have to look at anything else. Surcharge itself is only 2 lakhs, which means you're still paying lesser tax than your income. Therefore, MR will not apply. Therefore, MR will not apply. You don't even have to look at it. You don't even have to look at it. But the quick question, how many of you thought about MR? The others who did not think, you know what is going to go wrong. You know what is going to go wrong. Be very careful about these kind of questions. You are very close to the slab. You are very close to the slab. At least you have to be smart about it. Yes. So you are looking at your income. You'll add a cess at the rate of 4%. Number becomes 134,820. Total becomes 350,5320. This is what your final answer is. This is what your final answer is. For the others who got 2730, what happened? Sehul. Okay. 29, 21, 100. Both did 25, then how is the same number not same? Okay. 38, 22,000. You did with 30. Huh? Achha, you added 25% surcharge. You assumed it as unexplained income. Please be careful about all these things. Anyway, see, today's class and all, you're not expected to remember the numbers and all. You can use your books. The concept guide is not given for you to stare at it. You can use the books. It is okay to have your books open. As you keep coming for the classes, please start reading it once again and come so that you can remember all those things. Yes? Question number 11. Question number 11. A incorporation. AINC. AINC incorporated in US. AINC incorporated in US has his poem in India. Has his poem. People know what is poem? Place of effective management. Has his poem in India for the previous year 24-25. has his poem in India for the previous year 24-25 and has therefore been termed as a resident. And has therefore been termed as a resident. And has therefore been termed as a resident. His total income for the total income of the company for the year is, the total income of the company for the year is 2 crore 40 lakhs. The total income of the company for the year is 2 crore 40 lakhs. Find out the tax payable. ஒரு கோடி இருந்தா 7 So A incorporation. Hey, I forgot facts. Sorry. Turnover of 22-23 is. Turnover of 22-23 is 190 crores. Sorry. Turnover of 22-23 is 190 crores. See, every time you want to do it, put commas down. Okay, 2, 40, adukapro 2 0, இன்னொரு 3 0. 93, 47, 520, 89. Acha, 89, 10, irra. 89, 7, 20. 118, 1018, irra, 1018, 368. Worstடா you are. எக்ஸாம்ல இவ்ளோ கஷ்டப்பட்டா கஷ்டம்டா. மாத்தினே இருக்க. உனக்கு சொல்ல அவன சொல்றேன். எல்லா ஆன்சரே மாத்தினே இருக்கான். People on the back, what are the numbers? Straightforward, simple question. No margin relief also in this. What is the number? 89, 10, 720. Okay. Tisha. Hey, irra. 1 crore. नीचे. Tisha. Ma, don't search there. You tell me your number. Monica, number. You're comparing numbers, is it? I told you don't compare. You look at your numbers. 66, 76, 800. People on the back. 89, 10. Monica. 73. 18, 500. One foreign company, 5 different numbers. Yes. People, what is the total income here? 2.4 crores. 2.40 crores. You will have to tax it at the rate of which one? 68,000. Okay. People, you have to tax it at the rate of 40. कहां से आ गया? Amendment of current year, boss. I just told you current year it was amended. Foreign company became 35%. Yes, so 40 is wrong. A, rate is 25. Turnover is less than 400 crores. But resident, no. A resident foreign company is domestic company. Correct, Notisha? A foreign company which becomes resident in India is domestic company. What is the definition of a domestic company? This is not an Indian company. So if you are a resident in India, you will distribute dividends in India. No? Taxes at the rate of 35%. Taxes at the rate of 35%. Please bear in mind, people, that for a company, your residential status does not determine your tax rates. Your nature of company determines your tax rates. Even if you end up becoming a resident of India, you will still be taxable at 35% because your category is still a foreign company, and which is where the worst of the things happen, because now that you're a resident, your global income becomes taxable in India, but the global income becomes taxable at 35%. This is also true that if you're a domestic company who becomes a non-resident, you will still end up paying tax only at the rate of 25%. You should end up making taxes only at the rate of 25% because you are a domestic company outside India, and you will only end up paying taxes on 25% on Indian income. Foreign income becomes non-taxable. Yes or no? Yes. The point about the whole provision is that your residential status does not determine your tax rates. It is your nature of company that determines your tax rates. This is one of the MCQ questions which always keeps coming in exam, and I've seen multiple questions around this. They'll suddenly give you a question where they'll say A incorporation, incorporated in US is suddenly coming to India, having a poem in India, and they'll give you options. One of the options will be 25, one of the options will be 35. If you choose 25, gone case. You'll have to be very careful that you cannot take it as 25. Yes, tax rate at the rate of 35%, number becomes 84 lakhs. You will add a surcharge of 2%, number becoming 9 lakh 1,68,000, thereby deriving an income of 85 lakh 68,000, thereby arriving an income of 85 lakh 68,000, on which you will add a cess at the rate of 4%. Number is 342720. Number becomes 8910720. 8910720. Yes. 9172800. 89 is the right answer. 1018 is because 40%. Amendments, people, be careful. 8568. Crime. Absolute crime. 7318,500. Took the turnover as? How does it matter? You took the income as 2 crore 5 lakhs. Turnover is not important, right? You change the wrong number basically. Reading question mistake. Step rule number 1. Identifying the question. Yes, let's read the question properly. Clear enough? Yes. This is your tax rates when it comes to people. Companies. When it comes to companies under the old regime. Now, I will like to take the new regime tomorrow because it has some intricacies, but on a high level, what are the tax rates when it comes to new regime, Rahul? Income tax comes and says that if you are going for 115BAA, this is applicable to any domestic company. The tax is now fallen down to 22% plus a flat surcharge of 10% plus 4% cess. Now, when I say a flat surcharge, income tax is coming and telling, I don't care what your income is. Any person, regardless of their income, whether you do 1 rupee, you do 10 rupees, or you do 50 crore rupees, it will always be surcharge of 10%, thereby arriving at an effective tax rate of 25.168%. This is what is your provisions for 115BAA. 115BAA. Further discussion on this in the next class. I'm just giving the high overview. Yes, when it comes to 115BAB, this was a special benefit brought in for newly incorporated manufacturing companies, they came and said you have to satisfy two conditions. You should be a domestic company, plus you should be into manufacturing. But the problem is they also brought in a sunset clause. The sunset clause came and said that you should be a manufacturing incorporated after 1st October 2019, but incorporated before 31st March 2023. 31st March 2023. That was the last period. Last year also you did not get the benefit. They stopped it in 31st March 2023 itself. Where they said you should be a domestic manufacturing company with an incorporation between 2019 to 2023. Every year we are going to the budget and we have been complaining to them saying that we want this to be extended, but they are not extending it. They told boss, this is the only one-time benefit I gave you. If you incorporated then great, otherwise it is gone. Now understand this one thing, they only asked you to incorporate. They never asked you to start manufacturing. Correct? Huh? No, they asked you to start manufacturing. They came and said that you should have incorporated after 1st April 2019 and should have commenced manufacturing before 31st March 2023. Sorry? They didn't extend it. They extended it for 115BAE only. Oh, they extended it. Okay, I'm sorry. Yeah. They extended. My mistake. I'm sorry about this. Yes, so they came and said that Rahul, if you are a domestic manufacturing company, you should have incorporated after October 2019, but you should have commenced manufacturing before 31st March 2024. If you do that, then you are under this bracket. Which means today, if I incorporate a manufacturing company, no benefits. In that period itself, if I incorporated a service industry also, no benefits. All those people could only opt for 115BAA. They could opt for 115BAA. I'm not saying that you have to go back to 25 and 30. I'm saying you can still opt, but you can only opt for 115BAA. What are the tax rates, Rahul? They came and said you will have to tax at the rate of 15% plus a flat surcharge of 10% plus a flat surcharge of cess of 4%, thereby arriving at an effective tax rate of 17.16. Now, as of now, this is what the tax rate is. In tomorrow's class, I will tell you there are 5 more tax rates. There are 5 different tax rates under 115BAB. Yes, the general tax rate is 17.16, but there are 4 more rates to be worried about. You will have to take on those rates also before you start computing your 115BAB. A very complicated level section. Too many complications in exams. Ideally, they have not tested it yet. Which is why I have prepared my own questions and we will solve my questions. We will see how much you can answer those kind of questions also. Yes, tomorrow we are getting into nitty-gritties, people. Tomorrow we are not just talking about rates, we are also going to be talking about conditions. Yes, because 115BAB has a multiple set of conditions, and if you satisfy those conditions only, you can opt for 115BAB. So we look at the conditions, we will look at the tax rates, and then we will conclude accordingly. Clear enough? Yes, great. My small request, people, for the Sunday's class, if you can print out that financial statements which I gave you, it will be helpful. I'm telling you today because tomorrow is a holiday, your office will not let you print. Yes, you are working, huh? Great. For those who are working, print it tomorrow. Yes, for those who are not working tomorrow, go to office, use the printer, get the printouts for me. Sorry? Sandosham. Yes, be very, what do you say? Secretive when you print and all these things. Yes, if someone comes and asks you, you should not tell them that you're printing things. Okay, use the printer to the best extent possible, people. Don't worry, I will give you a solution guide also. That also I'll ask you to print and come. Yes, rather than me spending money and getting you the books, you can print and get free of cost. I don't think your manager is going to come and shout at me, right? Yes, so I'll give documents, people. Use the printer to the best extent possible. I don't know why everyone is buying sticky notes. It's already there in your office. You should have just taken it from there. You're not qualified CA yet. Adam prachana. Yes, anyway, I'm just kidding, people. Please have your equipments ready. In Sunday, if you can bring the financial statements, it will be helpful for you because you can make notes. And then you can use it as a reference for your future computations also. Yes or no? Yes. Keep that in mind and come for the Sunday's class. Before you come for Sunday's class, like I've given the homework, you will prepare a statement and come. And you will come and tell me what and all disallowances you thought of. People, I want to know a general understanding. I'm not telling you that you have to look at the financials and tell me, and the financials. My point is, if you look at one of the items, what exactly comes to your head? That is what my intention is. Clear? Yes. So if it is not applicable in that financials also, we should be able to answer that yes, if it comes, then what happens? So your notes is to take one item and think wide. Think wide and tell me, Rahul, this item Manda, this could happen. This could happen. Let's see how many you answer. Yes, we'll play a game. If I'm able to give 20, let's see how many you're getting out of 20. Yes, that is the kind of game we'll play. Winners will get awards. Winners will get awards. Now, Gurugram, I have enough money. You are going to pay me, no? So I'll give it back from that. Okay? Yes? Great. Thank you, people. Have a good day.